for years to come. All right, guys, welcome. We're going to be covering the 1099s that is going to be issued by the end of January. And there's some things that you really kind of want to look at your books for to make sure is in place, and also be aware of as you go along whenever you deal with vendors, whenever you have special situations, because these reportings are just as important as any other legal aspect that your organizations face. What we're going to cover, of course, is understanding why this is so legally important. We're going to talk about some of the most common qualifying payments. There are a lot of different ways that you can report stuff on a 1099, 1099 miscellaneous, or 1099 NEC. I don't think any of you are in the fishing or trawler business, but that's one of them. So trust me, I'm going to just be on the most common stuff, and it should apply to you for the most part. We're also going to talk about prize winners of games of chance. We are going to talk about games of skill too, but games of chance has its own requirements, which includes the W-9 form and either issued in a 1099 or W-2G. So this kind of still ties together. And then we're going to talk about what a truly valid W-9 is. And I got to tell you, it's remarkable how easy it is for people not to understand what they're seeing. And then, of course, being able to get all that information together by the end of the year kind of relies on how you pay things as well as how you record things. So we're going to talk about some best practices there. So let's go ahead and get started. Your legal responsibilities. You have to understand that as a corporation, federal law requires you to withhold labor-related taxes whenever it's appropriate. You know, if you're an employer, or as your boss does for you, if you work for somebody, they have you fill out that W-4 because they need a record and your signature to say these are the taxes they're going to withhold, and they have to submit it to the IRS. And of course, they make their own payments to the IRS. With contractors, obviously, you're not by default withholding taxes, but instead of the W-4, you sign a W-9. Basically, what that means is that for those who qualify, you need written proof to treat them as a contractor for withholding purposes. And that's what that W-9 is about. Without it, you actually could be culpable for their tax burden. First, the entity that provides the W-9 does so because they're agreeing to pay them for you to pay them as a non-employee for their time and expertise, right? Now, that agreement between you and the vendor, the IRS doesn't expect you to withhold the tax, but they expect you to report the income as a third-party verification so they can collect the proper taxes from the vendor, thus the W-9. The second thing it is going to do is make sure that they identify what federal classification and their federal information that needs to be filed for, because without it, you're just guessing. And the ramifications of this, without a complete inside W-9, there's no written proof on why to not withhold taxes from their employment style of work that they do for you. And while the IRS is pretty flexible on a few things, this one they tend to be a little bit more strict on. If you ever screw up and you don't have the right information for somebody in the first year, they usually send you a letter and they'll say, hey, guess what? You did this wrong. This is how you do it right. And if you're going to continue to work with them, you have to withhold 24% of their payment to be submitted to the IRS on your behalf. Kind of gives you an idea of how quickly contractors will want to provide a W-9 as opposed to you taking 24% of their payment out. If you end up using them a second year and the IRS sees it, then the IRS is coming to you for the 24%. So if you paid a vendor $10,000 and suddenly you now also have another 24% that you're going to have to pay on top of that, it's a problem. So it is just as it's legally required for you to get federal tax withholding information from employees, it is also important to get it from non-employees. And that's where that whole idea of responding to unhelpful recipients, that's the law. You have to prove why you don't withhold. And if they choose not to provide a W-9, You can just say, great, we will go ahead and remove that 24% and give you the rest of the remaining amount. You'll be surprised how quickly they want to cooperate. And by the way, anytime something comes up down in the meeting chat, if you have a question, fire that off, and hopefully I'll see it in an appropriate amount of time. Now, almost everybody knows when it comes to qualifying payments when you're issuing a 1099, is that the threshold is if you pay them $600 or more in a calendar year. Now, a lot of people have taken on some of the internal best practice to go ahead and make sure they get a W-9 before they release a check. You're required to pay them for your time, but you could kind of use that as a caveat to make sure you get that. But what you're talking about for qualifying payments, the most common thing is, of course, time and expertise. The blood, sweat, and tears of someone that you would hire to do a job for your company. In this case, your nonprofit needs a maintenance guy, needs a lawn service guy. That if you were a bigger company, you could probably hire your own staff. Us, accountants, lawyers, grant writers, anyone that you're paying to give their time and their expertise, they're the ones that are basically non-employees, but they're going to be compensated like employees. It's the idea of making sure that you can clearly define what they're giving you as opposed to just a product. Let's say you buy some t-shirts. You're not going to give a guy, the t-shirt guy, a 1099. You're not going to give the waiter at the restaurant or the restaurant itself a 1099. Yes, they hired people to prepare the food and serve it to you, but that's part of the cost. Those are just, you're getting a product in return. However, when it comes to repairs and maintenance, what the IRS sees is a vast majority of that cost is on labor. So usually by default, when they give you an invoice and you pay it, someone needs to install a new air conditioning unit for your office, and you hire them. You also are buying the AC unit from them. And basically the entire invoice is reportable on the 1099. However, if they do make a clear delineation between the labor portion and the parts portion, it's okay to go ahead and just report the labor portion. It is important that you have a clear record of what that is, but you also want to kind of put that in your books in that same way, so it's very clear to you at the end of the year what that was for. Now, some of the things that aren't related to actual employee stuff is also very common in our realm, and that is rent for office space. And when it comes to games of chance and games of skill, that can actually come into play. Now, a 1099, a W-9 is still required from those people. You'll get a W-9 from them, and at the end of the year, for the people for rent for office space, you're going to report what you paid them on a 1099 miscellaneous. The key here is that this is not rental for cars, rental for storage space, even rental for stuff that your program is involved with. And I think very clearly about some of our horse rescue charities that we work with, that they have a big barn, but that's not where they do the administrative work. That's not an office space. So if you have some facilities, but it is not used for administrative work, then that doesn't apply. But rent for office space, and the IRS is surprisingly clear on that, that's the only rental type of income, or excuse me, rental type of expense that you would report on a 1099. Now, winnings of games of skill, and I say not chance because we're going to go into the not chance portion here in just a little bit. The key here is winnings of games of skill are anything that the person that is involved in. You have some fundraisers, you have a community thing, and part of it is you're raising money and they can win something from it. In that case, it's those type of activities where their personal involvement can decide the outcome, whether it is the closest to the whole type of thing, or darts, or even poker. which, by the way, you're not going to be making money off of poker. You could have poker tournaments, but we could get into that some other time. But it is their own skill, their own involvement that helps determine the outcome. Those are games of skill. And again, if they win $600 or more, minus whatever the fee was that they put to enter, then you're going to report that also on a 1099 miscellaneous. The last one that I have down here are royalties. Royalties doesn't need that $600 or more in the calendar year. It's just $20 or more. I don't know why it's so low, but perhaps it's because, you know, most people, if you have some sort of agreement to intellectual property someone and you pay them for the use of that intellectual property, you'll have a W-9 from them, and then you report those royalties over $20 in the calendar year on a 1099 miscellaneous. Now, let's start talking about the games of chance, because this is where fundraising tends to get missed a lot, and expectations by both the organizations and the winners really need to be clear from the get-go. One of the things that to give you an example right now, there is one of our clients has a pull tab thing. I think it is. Oops, sorry. They have a pull tab thing. And the pull tab thing continues to grow over time. It's over $80,000. And when it gets to that point, they are legally required, if the person wins, they are legally required to actually take the taxes out before they hand the winnings to them. And if you get people that don't know some of the expectations that I'm about to go over with you ahead of time, you can get some upset people that are trying to donate. Above all else, the organization must make clear and consistent effort to inform the participants about the obligations of the winners. Lawsuits aren't uncommon if the organization fails to stipulate that there's any possible withholding tax or reporting requirements. For all cash prizes, the winning value, as you can see there, if it is a game of chance, basically they have it's all by luck that they get it. They're not involved with how to influence the outcome. They just sign a ticket and you drew it by random or whatever it may be, spinning the wheel. Then the way it works is that if it is $600 or more plus 300 times or more of the wager, then you're going to report it. I'm going to have some examples for you so you see what I'm talking about here in a moment. And then, of course, when that occurs, you get a W-9. And in this case, you're going to actually issue a W-2G, which is, it all centers around the W-9, just so you know. Everything is about where the W-9 starts, and then sometimes you file different forms. Now, if there is a winning value, which is very common, like I said, with that pull tab thing, or with like the idea of winning a car, which we've had a few of our charities, you know, they raffle off a car. If the value is $500 or $5,000 or more, you're reporting it no matter what. And you're actually withholding the taxes from it no matter what. And I'm going to go ahead and give you some examples here real quick. All right, example one. We're going to work on the first thing that doesn't meet both criteria, the $600 or 300 times the wager. Person paid $1 for the winning ticket. The wager test, of course, 1 times 300, $300. The winning amount was $400, so it met the wager test, but it's less than 600. You don't need to get a W-9. You don't need to report it on a W-2G. Give them the money, thank them for coming. Here's the second example. A person paid $5 for a ticket. So here now we have on the wager test, you need to be at least $1,500 or more. In this case, the winning amount was only $1,000. And so, yes, it was over $600, but it failed the wager test. Again, don't need a W-9, give them the money, thanks for coming. Now, this is where you start actually having to issue something and these are games of chance. Remember that, because games of skill, there isn't a wager in there. It is just simply them having an entry fee. But this is about games of chance. So if the person paid $5 a ticket, just like before, but this time they won $2,000, then it is over the $600 and over the wager test. You need to get W-9 from the winner, and you'll report it on the W-2G at the end of the year. Now, the third one, the most extreme one, is if the winning amount is $5,000 or more. I don't care what they wagered. It could be $1,000 and they only got 4 times as much. You're always going to report it. I think the reason they want to have that threshold is because, you know, everybody going to Vegas, you would get, you know, W-2Gs overwhelming the IRS. But once it becomes 5,000 or more, you're going to get a W-9. You also probably want to get a copy of the government issue ID from the winner and then report it on the W-2G. There's a reason for that, because you're going to withhold taxes from it. I have a whole spreadsheet or a whole flows chart here that might be a little intimidating. You're going to see here in just a second. But to give you an example, failure to provide a W-9, or if the winnings are over 5,000, you're legally required to withhold 24% of the cash value. That is, even if it is under 5,000, because the government wants their taxes from gambling, which of course a raffle ticket is. It's all by chance. So if someone does meet that third example, where they pass both the tests, but they're still under 5,000, but they don't want to provide a W-9, then you're going to withhold 24% of the cash value. If they want their 24%, have them provide you a W-9. It's just that simple. For non-cash items, let's say it is a car, as I mentioned. I'm not sure if you guys have ever heard or watched Price is Right. Obviously, you've heard of it, but I don't know if you've heard about how some winners go on the Price is Right, and then they get the big showcase and they get all these different things, and then they walk home empty-handed, because they are given these prizes. Yes, they win these prizes, but they're still required to pay the taxes on them. If they cannot pay the tax, Price is Right isn't going to give it away. That's just how it works. It's the same with nonprofits, obviously, even more so, that if you do have a car that you're giving away and they win, then, and this comes back to what I mentioned before, making sure it is clear and consistent that people understand that this is part of the process, that they must provide 24% before you can actually release the prize. If they don't give you the 24%, then you don't release the prize. And of course, those amounts that you collect, whether or not it's because it was over the $5,000, whether it was for a non-cash item, whether it was because they wouldn't provide you a W-9, then you collect them. It's submitted at the end of the year, along with a different form and the payment. Now, I'm just thinking about something for a second. How did I get sidetracked on that? I guess I will come back to that. There was something else. Ooh. I hate myself. All right. Just to give you an idea, this is the flow chart to figure out how to figure out prize winnings reporting and what you do with it. Oh, I remember what it was. You'll see down here on this flow chart, down at the very bottom, sometimes the organization itself will also promise that they will pay the taxes on those things. Like if you are going to give away a car, they also said you can also decide to pay the taxes on that car for the winner. And basically there's a way that you do that. So that way you can definitely give the car to the person, the taxes are paid for, and then it's all theirs. But they still need to provide you a W-9. But this is the flow chart. And as I mentioned before, my email at 1099@azcpa.com. If you want a copy of this, by all means, send it to me, because you can see it's a little involved. Moving on, getting a valid W-9. This is probably the one thing that trips up the most people. I have perhaps maybe a third of the people of our clients, we actually help them go through their entire books. This is what I do every January, that I'm just going gangbusters, looking at every single expense in their books to find anything that qualifies, putting them all together, making sure we have the right information. And if we don't, try and get that information so we can properly file. Of course, that W-9, which you're required to have if you're paying a vendor for services, needs to be completed and cleared. So I'm going to kind of go over a few things about it because there's a lot of things that are easily missed just simply because people don't read the instructions. So let me bring up, kind of zoom in on the top part. The very first part is the name itself. This is the name that people love to put their name on, even though, okay, they work for Joe's Auto Body. And they will put Frank Stallone there in the name, but the actual business name is Joe's Auto Body. The point here is whatever is in box one actually needs to be the entity that is going to claim the income on their taxes. And of course, it must match the tax ID as far as the IRS. It needs to be the legal name. It can't be a DBA because the DBA is what that second box is for. If it is a DBA, that's perfectly fine, and you file with both the legal name and the DBA. It could be an individual that has a DBA, but either way, box one definitely needs to be filled in with whatever legal name is claiming the income. Box three, obviously something must be checked. You would say that it was obvious, but I've seen a bunch of them that aren't, and I don't understand why. But either way, make sure this is checked. Find out, obviously, individuals and single member LLCs, that's very straightforward and clear. That can either have a social security number or EIN in some cases. But there's also the other choices of the S Corp, C Corp, partnerships, trust estates, and limited liability companies. And you notice here under the limited liability companies, there are C Corps, S Corps, and partnerships. What this is helpful for is that if you get this ahead of time, you are saving yourself a little bit of time. That anytime that you have a corporation, a C Corp or an S Corp, or a limited liability C Corp or S Corp, you're not required to file. Those corporations actually have certain reporting, so the IRS basically feels they don't need any confirmation from you, so it saves you time putting everything together at the end of the year and making it 1099. There is one exception to that, though. It is for attorneys. If you pay an attorney for any reason, it is, even if they are a corporation themselves, you are still going to issue a 1099. I don't know why. I don't know, maybe the IRS doesn't trust them or whatever, but there's two types of payments that you report for an attorney. Obviously, one is for legal services, which is just that 1099 NEC, which of course is non-employee compensation, that your business could have its own attorney, but you hired this guy. The second one is if you ever have to pay an attorney in relation to some sort of court order or settlement. This could be anything from garnishments to an actual lawsuit that was settled, and the payments are going to a lawyer. So those payments also qualify and are filed on a 1099 miscellaneous. So even if the attorney is a corporation, you are still going to file their 1099 in one fashion or another. Obviously, the street address, all this stuff needs to be accurate. These items that you see here, the only reason why you need to get an updated one from anybody, first off, you need to use the most recent one, which, just Google Form W9 and get it and download it. The IRS will always post the most recent one if you're getting it for the first time. But if this is someone that you used in years past, it's okay to use the one that you got 2, 3, 4 years ago, as long as the information is still valid, as long as it's the same name, the same legal name. Some people get married, you need that married name, right? Because they're updating it with the Social Security Administration. If they change your address, it's helpful. It doesn't kill anything, but if there's a mismatch, and of course, if you're talking about a common name, that's a problem. There's also the idea that some people can change their EIN. I've never heard them change their Social Security number, but some vendors will change their EIN. So if there's any changes to this form, that's when you request an updated one. But down here on the next part, below all that address stuff, we have, of course, the recipient provides the proper tax ID. This needs to match the tax ID of what was in box one. If it's an individual, likely it's a Social Security number. Some people, and I've had to be very clear with them, some people use their own name for their business name. And as confusing as that could be, I need to confirm, okay, what is it really? What are you claiming this under? Is it under your personal taxes, or are you filing a business taxes with an EIN instead? So it could go either way. One thing I've also seen is someone decides to fill in both, and that doesn't work. I need to know which one matches which. The other thing that finally makes this a valid W-9, it has to be signed and dated. I've seen quite a few blanks there. Now, you could have all this other information in the world, and if it's not signed and dated, and it never comes back to you that, hey, why didn't you file withholding tax from this person? You actually wouldn't have written proof because no one signed and dated it. So by all means, trust me, I've seen enough of them that aren't signed and dated. Veronica says, should we just take the vendor's word they're a corporation? No, because I'm a liar. Number one, I'm male. And number two, I'm goofy. But no, you are legally required. Just like, again, as I mentioned at the beginning, if you're an employer, you're legally required to have them fill out what, the W-4, the I-9, anything like that. You have to have that on record to show why you treated them for the purpose of withholding taxes. And I had someone call me, and I tried to send them an email too, and it bounced back for some reason. Anyways, someone called me and just asked me, are you guys a corporation? I said, thanks. I said, would you like me to send you a W-9? Because I have it right here. I'm ready to pop it off. Anytime that anyone gets paid for something, they're legally required to provide a W-9 when requested for the appropriate purposes. That is the individual or the corporation, doesn't matter. So for your records and for your safety, number one, it's your legal obligation. Number two, it's a CYA to make sure that you have a W-9 on record. Another reason why that is just as valid is because I've actually had people submit something and they realize they submitted the wrong Social Security number. And the person came back to them and said, hey, why did you use this? They're all yelling at me. Well, this is what our W-9 said. So that person got an updated W-9, and then they're going to keep using that person with the proper Social Security number. So it's very important for you to have a record. You need it to CYA, but most importantly, it's your legal obligation. So did I answer your question? Now, there are differences in the way you pay stuff, and this might help you kind of reduce your efforts in this. Remember when I mentioned about how prizes, once they're over $600, then you start calculating all that stuff. If you decide that you're never going to give a prize over $600, boy, you just saved yourself a lot of trouble. Same thing occurs when you pay vendors with credit cards or PayPal or Venmo, Cash App, Google Pay, Stripe, Square. All of those are merchant services. Basically, they are turning around to where they are actually putting through something through a merchant account that requires that person to provide their tax information. That's the beauty part about it. They already have it. And just this year, starting for 2022, PayPal and a few others have joined on so that you don't have to worry about issuing a 1099 if you paid with those methods, because those entities will issue those payments on your behalf. That means that if you do have a landscaper that you've paid $3,000 over the course of a year, you did it all with credit card or with PayPal, then PayPal or that credit card will issue the 1099, and making sure that you realize the difference. That way you don't even have to worry about it. It's off your hands. If you have other issues the way you work with people that you need to be very clear on the method of payment. I'm going to go in here in a moment on some ideas how you can do that. Just so you're aware, Zelle is not one of those entities. That's not the same. In fact, you're going to treat that as if you gave them cash or a check, because what Zelle is it is obviously it's a similar service to PayPal and Google Pay and others, but it was originally built as a clear exchange. In fact, it's a peer-to-peer payment system owned by like 7 different major banks: Bank of America, Truist, Wells Fargo, JP Morgan Chase. They all own it. It's basically Zelle is just an internal network that they built with themselves. So ACH payments aren't subject to the reporting that credit card companies are going to do and PayPal companies are going to do. So if you use Zelle, you need to be the one issuing the 1099 when it's appropriate. There is another company that's coming out that I believe is called Chuck. I haven't really researched it much, but there's another company that also is a lot like Zelle. It is that same similar bank-to-bank network type of thing. So if you're using that, but Zelle and Chuck are the ones that you have to treat just like cash or check. Now, using these diverse payment methods, obviously, all of you guys probably still use the same methods for most of the stuff that you do, that you're used to writing checks and that's what you do, or you're used to swiping a card and that's what you do, or you set up on direct pay on your bank and that's what you do. Of course, direct pay is usually is basically either ACH or them writing a check. So those are the ones that you report. So one of the things that I suggest you do, this is an example out of QuickBooks Online. Whatever you're using to track your books, I'm not sure, but there's a couple different ways that you can make sure that you are kind of separating stuff, because there are times that you're going to pay someone in multiple ways. Like you hired someone at the beginning of the year, they were a grant writer, and you paid them $1,000 and you wrote them a check. And then later on in the year, they actually set up something, you used them again, you paid them another $1,000, but this time you used the credit card. The $1,000 check, you still need to report. So making sure that you are reporting the amounts that aren't related to those credit cards and that sort of thing is very essential. So I definitely always encourage people, set up a payment account. You don't have to have a payment account for every method you have, but I know that QuickBooks Online also gives you a payment method that allows you to set it up specifically so that when you sort these, you can tell which payment methods were used at which time, and basically eliminate them from the calculation process. Some people use reference numbers, like if you do have a debit card or a direct draw from your bank account, that yes, it's coming directly from your bank, but it has that nice little symbol on it for Visa, MasterCard. It is basically the same as cash, or not the same as cash, because it has the Visa, MasterCard logo. It's running through a merchant account. So even if it draws directly from your bank, let's say the account is your bank account, you could put in the word debit here, and basically that way you know that it was paid by the credit card, even though the credit card doesn't have its own statement, because all the activity is right there on your bank statement. It's not a credit card statement. That way you can make that difference. But either way, there's different ways that you can set it up so you can consistently track what was the payment method, so you can separate those ones out that you didn't need to report because they're being reported by those third-party organizations. So I think I have bored you enough. So I guess from this point, I want to see if there's any specific questions that you have. Obviously, we could talk about it offline too, but if you have any questions, just jump in here. The one thing I will point out, of course, some of this stuff might be a little late for you to prepare ahead of time. You have to go back through this, but by all means, start looking at the people that you deal with, these vendors that you're paying. And if you don't have a W-9 on record, you really should get one. And almost everybody that you deal with should be willing to provide it. Just send it to them, or send them a link from the IRS website, have them fill it out, send it to you. Just be aware that people that don't want to provide a W-9 you might not want to deal with going forward, but It's totally up to you. Relationships are important, and making sure you're clear from the beginning is always important. All right, I don't see anybody asking any questions. I must have done an incredible job. Sarah says, should we go through all the W-9s and ask for a new one if not signed? Yes, because basically that's a invalid W-9, because the truth is it's just like any sort of tax return or anything like that. If it's improperly done, it's just the entire thing's completely invalid. Bob asked, the 50-50 raffles, tickets are $1 a piece. Doesn't matter how many tickets. Thanks for pointing that out, Bob. That's a really good question. Basically, if they won once, then that's enough, because it is based on the one chance to win. And I guess when I say the wager itself, it is how many chances did they need to win, or what did they have to pay just to win once? Because if it's just one ticket being pulled, they only really had to pay for one. Now, if you ever got somebody that ended up going to an auction, or not an auction, or basically doing a raffle, and they won 20 things, then each individual one is based on what is the value of that. So it only depends on your one chance to win. Does that make sense to you, Bob? Thumbs up. John asked, does merchandise suppliers require W-9s, or is there exception for the product versus service? If you're buying product, for the most part, it's product. You're getting something in return. It's not their time and expertise. Yes, in a sense it is, but if that was the case, then you would be issuing a 1099 for every restaurant you ever went to, right? When you get a product, for the most part, it is those kind of items where you start saying, in the course of doing a business, that if you pay someone to make you t-shirts, you're buying t-shirts. That's the entire price is in there. You're probably not going to have an employee to do that. But if you're going to bring someone else in, then if you're talking about maintenance to what you have, car maintenance to company vehicles, or even healthcare providers, we have some animal rescues that they hire veterinarians. So instead of them actually having vets on staff, they just hire them, and so they are providing their time. But it's the product part that is important. So I hope that answers your question. The t-shirt supplier won't require a 1099. Yes, you're right, John. Okay. Leanne, do you need a new W-9 each year? No, ma'am. When it comes to, as long as the information hasn't changed and it's valid, you could have one from 2010 and it's still good. When you do ask for a W-9 for the first time, the IRS always wants you to use the most recent form. But if it's valid, usually the only time you're asking for a new W-9 is mostly name changes, especially when it comes to marriages, that sort of thing. But for the most part, by all means, as long as it's valid, you're good. Okay. Sarah, what if I don't have a copy of it, but the info is saved on the vendor card? Well, the key here is, there's whatever, like with QuickBooks Online, it gives you the opportunity to input this stuff securely, and so that it's on record. Some people also attach the W-9. I believe this is what Sarah's asking. Some people also attach the actual W-9 to the vendor record in QuickBooks Online, which is really helpful. I mean, if you want to find stuff about a person, you just go to their vendor record, you find their email, you find their phone number, you find their W-9, and including agreements. You can put your agreements right there with the thing. The truth is, as long as you know it to be valid, you want to file it. Whether or not you have a record of it is important to, of course, you as the organization. You should have a record. It doesn't have to be attached to something specific, but some record somewhere. If you lose a W-9, it behooves you to contact the vendor again and say, hey, listen, we've lost it. I just need it. I just need a new one. I need it for my records, etc. But by all means, don't lose that stuff. Will a copy of the deck be emailed? I apologize. Flat tire. Oh, poor Leanne. I'm so sorry. I'm recording this right now, so I can send you a link to the copy. So email me at right there, that 1099. Am I still sharing the screen? Yeah, 1099@azcpa.com. So that I can send you a link once it gets finished and you can see the whole thing. But of course, you and I are welcome. You're welcome to give me a call too, and we can talk about it directly. Let's see. So to clarify, t-shirt, right? Veronica, I have a vendor that's a photographer. Yes, you're going to 1099 him. He does give you a product, but the product is based on his skill and expertise, right? That you can buy your own camera, set it up, and in some cases just have it take it. You're paying for the photographer. Again, if it comes back to the point to where he says, all right, this I'm asking you to pay me $300 for my time, and then you can buy whatever you want. You know, you could buy 50 of the pictures or 100 of the pictures at this different price. If he is making a clear delineation between his actual service, his actual skill and expertise, and the product that he's giving you, then you can separate that. But for the most part, you want to get a W-9 from him and then see if it qualifies from there. Okay. Lynn was at the doorbell. All right. Did you say if we pay a vendor via debit card or credit card, we do not include that amount in the calculation? That's correct. And that includes, when I say debit card, it means the kind of cards that you get from the bank that has the MasterCard Visa logo on it. So that some debit cards don't have that. But if you're getting a separate statement, it's most likely a credit card. But it has to have a Visa MasterCard logo. And that way, if you do pay some of your vendors with credit card and some by check, really what ends up happening is you're only counting the amount for the checks that you wrote, not the credit card payments, if that makes sense. So, all right. I hate it when the doorbell rings and you're like in the middle of something. Is there an online service that automates requesting and managing W-9s that you would recommend? Not that I'm aware of. Basically, the W-9s themselves, since they have to be hand signed, they have to be printed out in some fashion. So there really is, basically it is, you go to the IRS website, you get the latest W-9 and you print it, and you can fill it in completely with Adobe Reader or whatever, it comes as a PDF, right? But they still have to have a hand signature on it because, of course, it is your proof as to why you do it. So eventually it has to be a hard copy, and then you can decide how you want to store it from that part. If you, depending on you and your bylaws, you can decide that it's can be just electronic or both electronic and paper. But by all means, yeah, there isn't a way to do it because they won't allow electronic signatures on W-9s. There's other forms that they allow, but not on W-9s. What was another one that was kind of common that they don't allow? Yeah, power of attorneys. When you get a power of attorney, electronic signatures are not a valid method of authorizing it. So, can you use scanned W-9s, or do you have to keep the original? Again, Gene, it's up to you how you want to make sure that you need to have a copy to provide. If it's a valid copy, and however you want to store it is perfectly up to you, as long as you know it's safe. And as far as having stuff in the cloud that is with a reputable storage space, I wouldn't use Google. I wouldn't use Google Docs or anything like that. They're still kind of notorious about storage and what you store up there. But having some place that you can have a backup, that that if the meteor strikes your computer, you don't lose it. But for the most part, it's totally up to you how you want to make sure you keep a record. Okay. So Lynn, you have been okay. Yeah. I can see that happening. And the key here is you're doing your best to report. If they ever come back to you and say, hey, this is not the amount, and I've had plenty of people come back to me because as I mentioned early on in this, we probably do 100 to 120 of our clients going through their entire stuff. And, we send out a draft to the client, they check it, and then we finally send them to the recipients, right? And the recipient says, I didn't get paid that, or, this is my different number. And then we can submit corrections. Not all services do that, by the way. Not all services will allow you to submit corrections. And in fact, I know actually QuickBooks, I love QuickBooks Online, but boy, are they greedy. Because if you want to correct something, I think it's $65 per instance. And I'm like, ugh. But they're more than welcome to refute it. Obviously, one of the ways they're refuting it is because your obligation is to issue the 1099s before the end of the month of January. It used to be longer. It was nice when it was longer. Now you just have a month to get your statements in at the beginning of the month, reconcile everything, make sure everything's accounted for, and then you figure out who needs the 1099s and get them their copy. Getting them their copy, you're allowed to get them their copy basically in any manner that is available. As when you're talking about getting them 1099s, it does have tax information on it. So you need to use a secure method, if not through mail. But they have the opportunity to respond back to you. And if there's a correction to be made, you can make that correction and resubmit it to the IRS. And that way everybody's happy. But if they're not reporting that, maybe they don't know what's going on. But yeah. So let me think. Any Elvis requests? Some Elvis songs. But other than that, does anyone else have any other questions? All right. Quick reminder again, 1099 at azcpa.com if you want that lovely, very involved flow chart for giving people winning prizes and how you do it. Basically, all of this is about exactly, the letter of the law. Protect yourself, make sure that your people know what to expect. So that way, from the very beginning, the relationship with them is professional and straightforward. Having problems with anybody is usually a sign that perhaps this is a person that you either you don't deal with or you realize it's just going to be a short relationship. But almost everybody should know this stuff. And again, if you ask me for my W-9 because I provided a service, I am legally required to give it to you. So don't ever feel guilty. Don't ever feel embarrassed or uncomfortable asking for a W-9. That's your job. That's their job. So if you have any further questions that you think about later, again, 1099 at azcpa.com. And I guess I will end it here. So thank you all for coming.